One of the questions I often ask a business owner when we start working with them is, tell me what's your sales volume or your sales revenue that you want to generate this year to accomplish your goals? And the answer I usually get back is a bit of a stunned silence, or I'm not quite sure. Or it might be, yeah, we want to do $1 million or $1.5 million. And then I ask the question about, okay, just how did you come up with that figure? And again, that's usually the response that I get. They're not quite sure, or it just sounded good, it felt good, it was 10 or 20% up on last year. And they naturally presume that it's always about growing more than you did last year. And inherently, none of those answers are incorrect. None of it's wrong. But wouldn't it be great if you knew exactly what your sales volume needed to be this year or whatever period that you're wanting to measure over, and you knew accurately what it was and how you calculated it? So this short video is about showing you one way to look at how to generate that sales volume or that magic number that you want to target for this period of time, or whatever year or period of time you're going to focus on. So let's go to the whiteboard. I'm going to run through a very simple example, and then you can plug your own numbers into that. Right, let's look at this very simple example, and then you can plug your own numbers in. In this example, the business was looking to generate a pre-tax, or what the accountants might call earnings before interest and tax, pre-tax profit of $100,000 after paying themselves a salary for their role in the business. They had fixed overheads, the costs that hang over your head every month, of $250,000. And that could be things like insurances, registration, power, leases, rents, things that happen every single month, regardless of whether they're generating top-line revenue. $150,000 of salaries for non-income generating roles, and that could be admin, back in financial management, it could be an estimating role, it could be part of the owner's salary for when he's working on the business, not necessarily in the business, which all adds up to an amount required of $500,000 or $500,000 of gross profit. Now, we call gross profit the real income, what you keep after delivering your product or service. So real income of $500,000 allows these costs to be taken into account and a pre-tax profit of $100,000. Now, keeping it simple, if this business has a gross profit percentage of 50%, extrapolating that out, it keeps half of every dollar that it earns. Yeah, it keeps the real income of 50% of every dollar that it generates. And therefore, it extrapolates out to $1 million in total sales or job revenue that's required. I trust that makes sense so far. So just one little thing extra. Let's say this business has an average job value of $10,000. So it could maybe, let's say it's a painting business or a roofing business, and they may be specializing in residential repaints or residential re-roofs, and that's average. Some jobs will be smaller, some could be larger. That then means that this business needs to generate 100 jobs each and every year, which means they need to win, complete, invoice, and be paid for 100 jobs, 2 a week roughly. Now, if it was a service or maintenance business, maybe the average was $500. Therefore, that extrapolates out to 2,000 jobs that they need to win, complete, invoice, and be paid for to generate that revenue. So now I have a bit of a game to play, yeah? It's either 100 jobs or 2,000 jobs. Now, the goal for you is to go back and do that in your business. In some future business videos, what we're going to look at is how do you actually accomplish the same profit by doing less work? Wouldn't you like to know that? Also, how do we work on growing our gross profit and reducing our overheads to be able to get a better performing business? So that's in a future video. First and foremost, you go out and work out what your sales or your total sales volume for the next period of time, whether it's the month, the quarter, or the year ahead, and look forward to hearing how you go.